From early December 2024 to late February 2025, major institutions have been aggressively selling Bitcoin, and it's through this structure that they are defending their bearish position. But if we analyze a more recent past, we can see in Solana's chart how, during this drop, where retail investors have been selling aggressively, the result of all this selling is actually leading to the beginning of a trend reversal. And we're seeing the same thing with XRP. After a sharp decline, what we're observing is how retail investors have been desperately trying to sell throughout this entire drop. We can also confirm this by looking at the delta. However, after a new absorption of retail selling, as you can see, the price is finally experiencing a bullish continuation. So what can we expect for Bitcoin's price in the future? Let's not lose sight of Bitcoin's chart on the weekly time frame. The other day, we were analyzing how this bullish excursion above the channel's ceiling isn't exactly something we find encouraging. However, we shouldn't assume that this event will inevitably lead to a highly aggressive bearish path, because nothing is set in stone. But without a doubt, it's an event we need to take into account. Essentially, we must demand a certain behavior from Bitcoin's price. Here we can understand that major institutions have been selling Bitcoin aggressively, as we can see how, after breaking through its creek, the price has systematically reached their institutional targets one by one. That's why on the 4-hour time frame we're closely monitoring this institutional selling. As we explained in yesterday's live stream on Crypto Insight, this supply line is exerting selling pressure, driven and reinforced by major institutions, which we know are heavily shorting Bitcoin in these higher price zones. And one thing must be made very clear: the fact that they are heavily shorting at these levels does not necessarily mean that the price will collapse without question. As I've explained many times before, institutions operate based on institutional targets, and once those are satisfied, as they have been, they can shift their focus to other strategies. However, the key to tracking whether institutions remain bearish lies in closely watching Bitcoin's structure. As long as this structure is not broken to the upside, we will continue to assume that institutions are still selling Bitcoin, which wouldn't align with a bullish perspective. But as you know, technical analysis and financial markets are not about predicting the future. Instead, it's about identifying market contexts and conditions that may present favorable opportunities for initiating long-term buying processes. That's why, in the Crypto Insight videos, we were already considering the possibility of looking for long-term entries throughout this entire area, even from much lower levels. It's not that we have a crystal ball and know for certain that this will break out and move higher, but we do know how to identify, for various reasons, certain price levels that can be considered market extremes. And that's where it makes sense to execute our trades, so that if major institutions eventually decide not to defend their positions anymore, we are already well positioned in the market. What do we know for sure if this will happen? Of course not. Nobody does. This isn't about predicting the future. It's about anticipating possible market extremes. At the same time, we continue analyzing financial markets and asking questions in the short term. That's why we cross-check our analysis and examine multiple assets simultaneously to understand what the broader market is doing as a whole. This is why we consider Ethereum's defense zone to be critical, a key area that, as you can see, is now positioned at a market extreme. If you're wondering why this qualifies as a market extreme, just look at Ethereum's ceiling. We have a range here, and we must understand that in the upper zones, the price is overvalued. The market has been defending this since February 2024. When the price reaches these areas of the range, the market has defined them as optimal buying levels, because at those moments, the price is undervalued. And the same logic applies in reverse. When the price is up here, it's overvalued and we see declines. Now look, we're currently below the structure. What better hypothesis, what better reason to try identifying the extreme of the extreme in the market? That way we can position ourselves for a potential long entry, in case this ultimately turns out to be a trap. And in doing so, we'd be identifying one extreme of another extreme in the market. If this setup is confirmed, we will already be well positioned. As you can see, our approach to analysis and trading is quite different, if not completely different, from what you typically find on social media. Most of the time, what you'll hear is that you need certain price confirmations before taking a trade. But the truth is, by following that philosophy, you're usually already too late. For example, if you wanted to enter at this point, what we do instead is try to identify these extremes, without knowing in advance whether they will hold or break. If they don't break, we've already secured a strong move. But if they do break, just look at where we are. This is where our obsession with finding the extreme of the extreme in the market comes from. And for that very reason, in previous Crypto Insight videos, you've seen our analysis of the SP 500. Throughout this entire area, we were literally pointing out a major window of opportunity where we had identified a technical bottom in the SP 500. In those videos, we explained the reasons behind it. What we are assessing here is that, during this massive drop, you don't even need to look at the VIX to know that fear is dominating the market. But if we look at the VIX, we can see how this very indicator is starting to rise at a rapid pace. It's clear that fear is taking over, and you already know what major institutions thrive on, what fuels their ability to orchestrate their moves. The big institutions injecting billions of dollars into the market, whether it's Morgan Stanley, JP Morgan, large investment funds, or banks, have a massive need to deploy capital so large that they struggle to find a counterparty. And of course, there's no doubt about it, the counterparty is the retail investor. So in these moments of panic and fear, it's well known that retail investors rush to sell out of fear. You just saw this reflected in the VIX. I'm not making it up. And because large investment funds need an opposing counterparty, a massive influx of liquidity against their own interests, that's precisely why these fear-driven moments are something they love. Smart money thrives on absorbing all that liquidity. If we talk about windows of opportunity, which is exactly what we focus on at Crypto Insight, then yes, we are currently in an investment window. And let me remind you, I'm only sharing my opinion. Everyone is responsible for their own decisions. Now, take a look. At that moment, there was no confirmation at all, but at Crypto Insight, we specialize in identifying these market extremes to maximize our trades. We don't like being late, we prefer to anticipate movements, which is something entirely different. Of course, we're not trying to predict the future, because in practice, that's completely unnecessary. And as we analyze Ethereum, which may also be at a market extreme, we see other charts like XRP, which is in excellent financial health. Just take a look at its chart. It's truly satisfying to see. And I think you'll agree with me, if XRP were a dog, it would be a purebred. Now, let's go over some key data on XRP. Here we have a strong bullish impulse. Just looking at it is impressive. It started back in late 2024. Damn, whoever caught that opportunity must be feeling great. If that was you, let me know in the comments and take pride in your XRP entry. After that impulse, we're seeing how major institutions with great precision and expertise have been defending their positions. In other words, this defense zone you're seeing on screen is the area where smart money has been stepping in. And if you pay close attention, after every bearish attack the market has thrown at it, even the most aggressive one, where we saw an insane amount of volume and an exaggerated delta, it all resulted in nothing but a wick, fully absorbed. In fact, after every attempt XRP has made to break this defense zone, threatening institutional position, we see how these institutions, who have been buying this entire rally with an almost obsessive persistence, continue to defend their stance. We can clearly see how all these players are still protecting their positions. I can't explain it any clearer. And all this strong defense we're seeing on XRP, if we now focus on the immediate present, we'll notice something important. After this institutional distribution process, you need to understand that markets are fractal and institutions operate on different timeframes. Of course, they can have a long-term investment, but then switch to H4, H4, or even M15, or even M5 to go long, short, or whatever suits them best. That's something we need to keep in mind. Now, looking at this distribution, you can also see how they're defending their positions while allowing an interesting excursion. What we can interpret here, just like I showed you with Bitcoin not too long ago, is that if we were to see a strong and aggressive breakout of this structure, we could assume that these large institutions, this smart money that's been selling at the highs, might no longer be defending their positions. And that is crucial. Now, what we find most relevant in X.R.P's chart is this massive bullish impulse. We believe that everything happening to its right is nothing more than a corrective pattern, a natural yet aggressive correction, the kind we're used to seeing in the crypto market. And if you ask me, I personally believe in this bullish impulse. I do. I see a lot of strength, a lot of momentum, and most importantly, it's backed by volume and delta. Look at that delta, I'll zoom in on it for you. It's clearly ask-driven. To me, that means buying, not absorption. Another key event here is this gap left in the mid-range, signaling weakness on the sell side. This is something we need to keep an eye on. So now, let's take a closer look at what's happening in the immediate short term and break down this whole process using our order flow chart. Boom, there it is. Now you're looking at the XRP chart with a white background. And thanks to this advanced charting method, we're starting to see some interesting details. Take a look. This is X.R.P's current price. But let's move a bit to the right. Let me zoom out a bit. What really caught my attention here? The most interesting thing about XRP, that you're in this reaccumulation phase, where institutions are adding long positions, we're seeing a clear volume profile. And if you're wondering why I'm using a volume profile in this section of the chart, the answer is simple. I want to identify whether there's a low volume node or a high volume node. In this case, we've identified a low volume node in this valley. Just look at the difference. If you compare this cluster here with the one right below it, you'll notice that the histogram is almost twice as big. That tells us there's a low volume node. That's why we've drawn this line to the right, marking it properly. And this suggests that following the recent strong bullish impulse on XRP, different from the one we saw earlier, we're likely still in a corrective pattern. Here, the price has found a boundary at a level where there's no transactional interest, and this has been confirmed. Another thing we can see is that the price hasn't attempted to seek all the value available here, waiting to see if it wanted to transact lower. It's as if the price asked, "Hey, can I trade lower?" And the response was a clear no way, not happening, so it reversed. Now, this all sounds great, but we need to keep analyzing. Let's dive deeper into this on an order flow chart, but on a smaller time frame. a 1-hour chart. Here we have the same section of the chart. What we're going to do now is zoom in to see how this entire area has been traded. And right away, something stands out to me. First, in this bearish attack, we're already seeing a lot of selling, a delta heavily oriented toward the bid, aggressively and clearly. We can see that inside the candles, but we can also confirm it in the delta down below. What we're seeing here is that there has been significant selling pressure. However, despite that, the price isn't following through in the direction it seemed to be heading. And if we look a bit further ahead during another move that also seemed like it was meant to scare traders, we again see a strong injection of sell orders, tons of supply being thrown into the move. But the price isn't going lower. Why? Because there's a low volume node right here marked by this line. This defines a boundary within a wide range where price could theoretically move freely, but it just doesn't want to go any lower. In other words, the market is signaling that XRP should trade higher. Now, switching back to the 4-hour XR Porter flow chart, I want you to focus on this key area I've highlighted. On one hand, we saw that sell orders were absorbed in H1 chart. Sellers weren't able to push the price below the low volume node, which leans bullish. But be careful, very careful, because when we look at where all this strong vertical volume is concentrated, we can see that, unfortunately, it's sitting at the top of the candle. And not just in this one candle, but in the surrounding candles as well. The volume is clustering within this entire range. And now, let me explain why this is so important. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Now, for a healthy upward move, we would have preferred to see the bulk of the volume from this massive candle accumulating lower, either at the bottom or somewhere in the middle, and then see the price continue rising naturally. That would have been a much stronger signal. But when we see high volume concentration at the very top of a big candle, it's not necessarily the best sign. That's why we've marked this area with a rectangle. And this is where we tell you, until this zone is broken through, we can't confidently expect a continuation of the uptrend. Because what we're evaluating here is that, after this bullish impulse, we might be in a corrective pattern. What we're waiting for is for the market to clear out all the transactional interest in this area, because here there is liquidity. Based on what you've just seen, and objectively speaking, because we've been looking at actual transactions that occurred at each price level in the past, this is real. Unlike those charts that sell you promises, telling you where stop losses and liquidation levels supposedly are, based on data that no one really knows the source of, very uncertain to say the least. But what I'm showing you here is real. So what this tells us is that it would be an incredibly bullish sign if the price were able to take out all these positions. That would trigger a cascade effect, a snowball effect, driving everything upward. Now, the real question is, after this impulse, will this level of protection and accumulation be enough? Will they establish a micro defense zone here to push the price up and trigger a black swan event, making everyone dance with joy? We don't know, because honestly, if they feel like it, they could hunt for some liquidity first. Why not? Maybe revisit the pot, do a bit of cleanup, create a move that seeks a mirror reaction, and then attempt, hopefully successfully, to clear out all these positions and create that cascade effect. If we translate this into a traditional chart, what would it be telling us? Well, as you've seen in the order flow chart, I mentioned that there is significant interest in pushing the price above this level. And if it breaks through, we should expect strong bullish aggression. Oh, and what a coincidence, that would also mark the breakout of a black swan event, a key institutional structure. And what I just explained makes perfect sense. We don't know if they'll block the price here to create a move, or if instead, they'll want to set up a structural trap, a classic one, right below this defense zone. By the way, that would be an optimal place to see if they want to make a move to clear out all these positions. We'll see how this unfolds, but without a doubt, we remain broadly positive in the medium to long term regarding the crypto ecosystem, as you already know well. Now you're looking at the Solana chart on the 4-hour time frame. Look at the ascending channel and how we're now seeing a breakdown of its base. Notice how the defense zones we work with at Crypto Insight play a crucial role. The price has moved toward that structure, suggesting that this breakout could potentially find its end at the defense zone. That leads us to a bullish perspective, expecting this to be a trap. As I explained earlier, at Inform Crypto, we aim to anticipate scenarios that allow us to develop an optimal risk management strategy, focusing on market extremes. And for some time now, we've maintained a bullish outlook on the crypto ecosystem. In fact, this Solana trap provided an excellent opportunity for long positions. So let's zoom in a bit and analyze what's happening here. We place great importance on this creek because we believe this entire range could be an accumulation process before an upward move. Now, let's examine how this auction has played out. What you're seeing here is the same chart, but we're zooming in to dissect what's happening inside the candles. This provides highly valuable and qualitative information. Now, look at how aggressively the price has been dropping, how clear it is that selling has been taking place. But this is just absurd. Look at the volume, and more importantly, look at the delta. Clearly, there was an aggressive attempt to sell. And if that weren't enough, retail traders thought they had control of the market, managing to push the price down slightly, until the institution stepped in and said, "Enough nonsense, we're in charge here." They planted massive buy orders, and you can see it in the wick of the delta candle. Previously, the delta was oriented toward the bid. When we see this, we identify an extremely aggressive absorption, and that's precisely why the price exploded upward. And in case anyone is wondering why we care about understanding what just happened in a very recent moment of an asset's price action, the answer is simple. It helps us grasp institutional positioning. Some newcomers might ask, why are we analyzing something that already happened? Well, now you have your answer. And if you still don't get it, I invite you to subscribe to the Crypto Insight channel. You'll catch on over time. I understand that everything I explain might not be easy to grasp at first. Now, take a look at this new price drop in Solana, how aggressive and clear the selling was. But notice how this selling pressure failed to push the price down immediately. We can see it clearly in the delta as well. What we're witnessing here is obvious absorption. And as I was saying, we need to know what the hell happened here. Because if we can detect absorption at this level, and then later price breaks through a structure, a creek with strength and conviction, of course, we want to know if absorption occurred. Because if it did, then this bullish impulse becomes even more believable. At this point, we start evaluating the potential for further upside. But I'll explain that in a moment. Now, for those who were doubting or didn't get it, is it clear why we need to know what's happening here? It's crucial to understand. That said, let's zoom in. Look at the sheer power and fury with which this structure was broken. That's it. A breakout fueled by pure-ass pressure, pure conviction. As I mentioned earlier, when the explosive charge is at the lower part of a wide candle, that's even better. Why? Because that charge actually managed to push the price higher. So do you believe institutions were buying here? Even more so if they're breaking a creek. Even more so if we've identified absorption down there. Now, what catches my attention in the immediate present? Seeing this explosive charge, there's no doubt in my mind that retail traders have been aggressively shorting this bullish move, trying to reverse the market. That was the attempt. And they've exposed themselves, because despite all that selling, price keeps rising. So now we've identified an area of interest. Think about it. There are traders who went short, and as soon as price started moving up, they've been suffering. Their trading accounts are in the red. So when price reaches this zone, they think, damn, I've been suffering all this time. Now that I'm at break even, I just want to close my losing position. And when a short position is closed, what happens? A buy order is executed. That's why we see this upward pressure. Now we have to ask ourselves, right at this moment as we're recording, price is approaching that zone. Great, but now we need to analyze and ask ourselves, damn, this is moving so fast I barely have time to explain. Let's see if this zone will hold as a level of protection. In other words, we need to determine whether these sellers, and by the way, also the buyers, are going to take action here with their positions. Because right now we're identifying a boundary. Either price bounces off with strong momentum, or it smashes through, signaling sharp declines in the immediate short term. And when I say sharp declines, let's not get carried away. I'm just talking about a quick revisit to the creek. No exaggerations. We're not talking about a bear market or some wild scenario. Everyone can spin their own theories, but let's stick to what we actually see on the chart. So as you just saw, we've clearly witnessed how institutions have positioned themselves long right here. We have the creek breakout. Now, we don't know if they'll want to revisit the creek before continuing higher, or if they'll just take off immediately. How can we figure this out? With what I just showed you. I hope you were paying attention, because depending on how price reacts in that zone I pointed out, we'll evaluate whether a visit to the creek is likely before continuing upward. Or on the other hand, maybe these traders will say, nope, this is as far as we go, and at most we get a small trap before continuing higher. Here we're not trying to guess, we're trying to understand. Where is institutional money? Where is retail, who is suffering? And by understanding how price moves beyond key levels, we can anticipate a deterministic reaction. That's exactly what we do here at Crypto Insight. Just like we analyzed the SP 500 at this exact point and saw that it was likely to push higher. And remember, the SP 500 and American indices in general have a very strong correlation with Bitcoin. That's why we care about understanding what the SP 500 is doing. Right now, you're looking at the price of the SP 500 with Bitcoin overlaid in yellow. Pay attention to the correlation. It's important to grasp what the American indices are doing. Now tell me, what do you think about the crypto market? Are you more bullish or bearish? Every opinion is welcome, so leave your thoughts in the comments. And if you enjoyed this advanced technical analysis, something you won't find on any other YouTube channel, make sure to like the video, subscribe, and hit the notification bell so YouTube lets you know when I post future updates. Well, good luck with your trading, and I'll see you in Crypto Insight Premium Live. Good luck, and see you next time.